Hey, so, oh, actually, it's already on. All right, cool. Hi, everyone. Hope all is well. They already just dropped the Q4 earnings. In terms of Q4 earnings, here are the numbers. The conference call already have it running in the background. They usually start pretty much exactly at 5:30 or 5:31. And I have it playing a little bit in the background. Hopefully the audio is not too loud. If it is, I'll adjust it. In terms of numbers, okay, so some numbers are pretty good. Some numbers are, I would say, a little bit on the low side, but overall it's good because they beat, so that's always positive. So I'll open up once again. In terms of, let me see, total company revenue came in at 173 million, which is pretty awesome because they were expected between 150 to 159 million in terms of estimates. Again, these were just estimates. IoT was expected to 62 to 66 million, but at the same time, I believe they were pretty close when I looked at them quickly. IoT revenue was all-time quarterly record of 66 million, so just on the top end of the estimates again, which is awesome. The cybersecurity side actually ended up being too. So a 25% year-over-year increase. IoT gross margin remained at 85%. And then at the same time, cybersecurity revenue was 92 million, a 5% year-over-year increase. Cybersecurity gross margin was 65%, which is pretty good because they were estimating between 83 to 88 million. So that's a beat on that side. And then let me see, cybersecurity increased sequentially 3%. Licensing and other revenue was at 15 million. Non-GAAP operating profit was 16 million, and GAAP operating loss was 56 million. Non-GAAP basic earnings per share was 3 cents, and GAAP basic loss per share was 10 cents. Estimates too, by the way, was at the negative 3 cents, so they beat estimates, so that's awesome. Adjusted EBITDA was 21 million. Total cash equivalent, short-term and long-term investments was 298 million, and cash used by operations decreased by 52% sequentially to 15 million. The reason why I went kind of fast over this, I'll go over them again later on, is because I'm more interested in terms of the forecast, the forward-looking statements kind of stuff. And actually, I'll go over this too. Full year fiscal 2024 financial highlights basically is total company revenue was 853 million, including 218 million related to the sale of legacy patent portfolio in Q1. So that includes, again, when they sold the patent sale, the first big chunk, because they are getting additional chunks, not necessarily as this big, because I believe the total was roughly about 950 million or something like that, total combined within 5 or 7 years. I would have to look at the details again, but that 853 million includes 218 million from the patent sale itself. Total company non-GAAP and GAAP gross margin was 61% for the, again, fiscal year of 2024. So like a recap overall combined. Non-GAAP operating profit was 36 million and GAAP operating loss was 125 million. Non-GAAP basic earnings per share was 5 cents and GAAP basic loss per share was 22 cents. Let me just check one sec, just in case the audio is not correct. All right, cool. If the audio is not correct, just let me know and I'll adjust it. Business highlights. I'll be going over this. So what I'm going to do is I'm going to go over the conference call and all stuff, or listen to the conference call, and then I'll post a video of my thoughts right after. So essentially just for all this stuff too. But if we have time, just in case they start up early, I just want to cover that forward outlook mainly for the most part. So outlook. BlackBerry is providing the following guidance for the first quarter ending May 31st, 2024, and the full year 2025 ending February 28, 2025. So total company revenue in terms of the full fiscal year for 2025 is 586 million to 616 million, which is okay, but the problem is I believe it's pretty much not really much growth. Do they explain it? I forgot. No, okay, they don't cover it. So essentially, for example, we could go to Q3. So Q4 we already know it's 53. We're right about 853 million. So minus 218, we're at 600. 22. So okay, so 625, if I'm not mistaken. Yeah. So 625 million. Or no, not 25, 28 million, sorry. I'm missing a couple, 30 million. Sorry, I'm drawing a blank right now. 35, geez, whatever. But either way, 600 and something million. But what he's going to say though is, actually it is quite important. Let me just do it. Sorry, I'm operating very low on sleep, like 1 hour of sleep. That's the only problem. Sorry about that. So yeah, 635 million. And then they're forecasting pretty much decline for the year. That's not really good. So year over year decline. IoT revenue coming in for the first quarter. So for the first quarter, in terms of total company revenue, 130 million to 138 million. But then total IoT revenue for the quarter, for the first quarter, for fiscal year 25, 48 to 52 million. Cybersecurity revenue, 78 to 82 million. And licensing and other revenue, approximately 4 million. Adjusted EBITDA, 15 to 25 million. Non-GAAP basic loss, earnings per share of 4 cents to 6 cents. Positive, I'm assuming, because they didn't put any negative here on both sides. And then in terms of IoT revenue for the fiscal year combined is 220 to 235 million, 350 to 365 million, approximately 16 million for licensing and other revenue, and adjusted EBITDA of 10 million. Non-GAAP of 3 cents and 7 cents. The only thing is, though, I'm not really impressed about the forward, though. But again, I'm not sure. The numbers for this quarter is good, though. So that is positive. And then at the same time, you know what? These estimates could be extremely conservative, because given that they gave us pretty conservative estimates hypothetically. So this was last quarter. They gave us outlook for the quarter, which is this one, about 150 to 159 million. Given that, and then they beat it with 173 million. Yeah, 173 million. They could just be on the low end if that's the case. But we shall see. We got about 5 minutes, give or take. Sometimes they might start a minute later. I know I said they usually start at 5:30, but it might be a minute later. But we'll see. If you guys have any questions, let me know. And then I'll try to provide comments at the end. But again, 1 hour sleep, so my comments might not be perfect right now. So I'll probably, what I'm going to do is re-listen to the conference call and then post, post my thoughts right after that. In the meantime, let me see. I think there was one other thing I did skip, actually, too. What was it? Actually, okay, so I'll go over the business highlights and strategic announcements. I believe I could cover that in 5 minutes. So BlackBerry QNX announces general availability of QNX Software Development Platform SDP 8.0, which we already knew. I think it was about roughly a month ago that they did this. It's scalable, high-performance foundation for next-generation automotive and IoT systems. Stellantis, BlackBerry QNX, and AWS launched Virtual Cockpit, transforming in-vehicle software engineering. Again, that was probably roughly, I think it was 3 months ago. That was good news. Backlog keeps going higher. Oh, okay, that is good too, actually, yeah. Oh wait, good point. Yeah, the backlog is getting higher, it looks like, overall, so that's good. So in terms of backlog, it's essentially for future contracts that they have. The only problem is, for the most part, most of these things, like in terms of production, they'll be signed up for them, but these vehicles, like for example, I would probably give one example is like in terms of Ford. If you saw my video, what was it? I think it was like 12 months, the next 12 months or something like that. There's an interview with a CFO of Ford, and the interviewee asked him about like EV sales going lower and all that stuff a little bit or something like that. And he said the most important thing is not really to look at EV in terms of making profits or something like that. I can't remember exact details, but what I want to emphasize was, he says, we're excited on our second phase of our vehicles, which is going to be like connected vehicles and applications and all that stuff, software and services. And they expect like in a way major headwind in terms of revenue growth from that kind of side of the vehicle portion, right? So when he explained that, to me that sounded like BlackBerry Ivy. And the problem is, though, unfortunately, it's not going to be happening this year or next year, hypothetically. But by the time it happens, it will still take time by the time BlackBerry's contracts come in terms of revenue and profits, right? So even though they're hypothetically lined up to come in, we won't be seeing that in terms like 2-3 years, just the way production works, right? So even though, like, for example, prototypes and all that stuff are being developed right now for that kind of technology, by the time it comes to mass production and all stuff, it's going to be a few years. That's the only unfortunate part. And then let me see. BlackBerry launches QNX sound and audio acoustic innovation platform for software-defined vehicles. I believe when they covered this, they said that they were the only ones who were kind of doing this in essence, in terms of this type of level of technology. Mobility and Harmony MIH Consortium, I even messed that up last time. A Foxconn initiative selects BlackBerry Ivy to power its next generation electric production vehicles. I'm just trying to listen if it started. This was actually really good. Because I remember I did cover this in a video previously, but this was actually major news because Foxconn, if you know, they develop basically iPhones and all stuff, a bunch of cell phone companies, and they produce, I think it's 50% of the cell phones out there in the market, or it's massive number in terms of they're the ones who produce the cell phones, right? Like they're engineered by different companies, but they are manufacturing it, and they want to do the same thing in terms of the EV market. And I think they're projecting only 5% for the first 2025 or something like that in terms of EV vehicles, but they partnered up with BlackBerry in terms of BlackBerry Ivy to incorporate some kind of structure, as in like a standard for their production and anything that falls in terms of suit of operations, if that makes sense. But I'm technically butchering the details. I covered the details way more in previous video, and I like go in depth in terms of the company and all stuff and their whole strategy. BlackBerry is first mobile device management vendor to receive BSI clearance for BlackBerry UEM Bright Site usage with Apple Indigo. BlackBerry's new cybersecurity center for excellence, CCOE, in Kuala Lumpur will offer SANS training courses to help grow and upscale cyber workforces in Malaysia. And then BlackBerry completes $200 million 5-year 3% convertible notes private offering and fully repays $150 million in short-term extendable debentures. This was pretty good, just because, in my opinion, it kind of showed that whoever it could have been two. I'm not sure who exactly it was, but to me, it shows that they believe in the company. Because again, 3% in today's market is not competitive at all, right? And then BlackBerry appoints Phil Brace as IoT technology industry veteran to its board of directors. But again, this was all just recap. Is this bullish or bearish earnings? Okay, so in terms, good question, guys. In my opinion, and yeah, I agree it's bullish in terms of this earnings. In terms of the outlook, I would say it's essentially flat almost, because where is it? So I'm just trying to listen if the earning call starts, so that way I'm going to disappear and then, yeah, okay. So in terms of this year, if you minus the patent sale, the revenue came in at $635 million, and then they're estimating for the fiscal year to come up $586 million to $616 million. Now, the good thing is, though, cybersecurity, this revenue was actually higher than they were estimating. So that means, in my opinion, like there could be a light at the end of the tunnel for cybersecurity in terms of being cash flow positive, because we know IoT is being cash flow positive. And what is he gonna say? With those combinations, that means hypothetically the company's moving in the right direction with the massive backlog mentioned earlier too, within the chat as well. So that is positive. It's just the only problem is, unfortunately, which every BlackBerry investor is aware of at this point, is it's kind of getting tiring to wait in terms of it's going to take more time. But that is the unfortunate truth, it looks like. But overall, it's good. It's not negative, so that's good. I just wish the fiscal year outlook was higher. But I will say this, since the estimates, hypothetically, they beat the estimates, this could be on the low side. I think that they're probably trying to give conservative estimates, and then that way they'll surprise. And then if that's the case, 635 million surpass, there'll be a beat and all that stuff, which will be good for the stock.
My name is MJ, and I will be your conference moderator for today's call. During the presentation, all participants will be in a listen-only mode. We will be facilitating a brief question and answer session towards the end of the conference. Should you need assistance during the call, please signal a conference specialist by pressing *0. As a reminder, this conference is being recorded for replay purposes. I would now like to turn today's call over to Tim Foote, CFO, Cybersecurity Division, and Head of Investor Relations. Tim, please go ahead.
Thank you, MJ. Good afternoon, everyone, and welcome to BlackBerry's fourth quarter and full fiscal year 2024 earnings conference call. Joining me on today's call is BlackBerry's Chief Executive Officer, John Giamatteo, and Chief Financial Officer, Steve Ray. After I read our cautionary note regarding forward-looking statements, John will provide a business update, and Steve will review the financial results. We will then open the call for a brief Q&A session. This call is available to the general public via call-in numbers and via webcast in the investor information section at blackberry.com. A replay will also be available on the blackberry.com website. Some of the statements we'll be making today constitute forward-looking statements and are made pursuant to the safe harbor provisions of applicable US and Canadian securities laws. We'll indicate forward-looking statements by using words such as expect, will, should, model, intend, believe, and similar expressions. Forward-looking statements are based on estimates and assumptions made by the company in light of its experience and its perception of historical trends, current conditions, and expected future developments, as well as other factors that the company believes are relevant. Many factors could cause the company's actual results or performance to differ materially from those expressed or implied by the forward-looking statements. These factors include the risk factors that are discussed in the company's annual filings and MD&A. You should not place undue reliance on the company's forward-looking statements. Any forward-looking statements are made only as of today, and the company has no intention and undertakes no obligation to update or revise any of them, except as required by law. As is customary, during the call, John and Steve will reference non-GAAP numbers in their summary of our quarterly results. For a reconciliation between our GAAP and non-GAAP numbers, please see the earnings press release published earlier today, which is available on the EDGAR, Cedar Plus, and BlackBerry.com websites. And with that, I'll turn the call over to John.
Terrific. Thanks, Tim. And thank you all for joining us today. BlackBerry delivered a solid quarter where we either met or exceeded expectations, and in the process, set a number of new records. We beat expectations for earnings per share, and given our laser focus on profitable growth, further improved operating cash flow as we said we would. In fact, this quarter, we more than halved operating cash usage, and despite being prudent and measured with our top-line outlook, we expect to be both cash flow and EBITDA positive this coming fiscal year. In the quarter, our IoT business recorded its best ever quarter for revenue. Despite the delays automakers have experienced with their software development programs, we also achieved our strongest year for adding royalty backlog from new design wins. This design win momentum has driven an all-time high QNX royalty backlog of approximately $815 million, or 27% year-over-year growth. On the cyber side, we saw a very important data point with ARR stabilizing and even growing a little sequentially. We believe this demonstrates the impact of the many improvements the team has been enacting recently. Cyber also recorded solid year-over-year growth from a revenue standpoint as well. So let me start my review with the IoT business unit. As you know, the QNX business benefits from its strong multi-year customer relationships. Given this long time horizon, the key metric for the health of the business is royalty backlog. This gives a view on estimated lifetime royalty revenue from the design wins that we have secured. And this metric has never been better, reaching approximately $815 million this past quarter. As I mentioned, it was a strong year for adding new backlog from design wins, surpassing last year. And this past quarter, we secured a number of design wins that contributed to this achievement. Within automotive, we continued to dominate the digital cockpit domain. And among the wins was Hyundai Mobis, who selected the QNX hypervisor to enable mixed criticality in the cockpit without sacrificing performance. Beyond our core RTOS, we recorded a design win with a Japanese OEM for our acoustics middleware that will enable audio in the digital cockpit across a range of vehicles. Outside of automotive, we have a strong and growing position in a number of general embedded markets, especially medical. And among the wins this quarter was one of the 5 largest medical OEMs in the world who selected the QNX RTOS as the foundation for a next-generation medical imaging machine for assessing blood and heart health. We also secured a win with a leading US-based OEM where our QNX real-time operating system will provide a secure, reliable platform for their 5th-generation surgical robot. In other applications, our QNX real-time operating system has been selected for use in a digital display for recreational power sport vehicles, demonstrating the potential for BlackBerry to expand into new verticals as the edge becomes progressively more intelligent. So moving to the quarter's financials, we delivered revenue at the top end of our guidance range. Revenue came in at $66 million, representing 20% sequential and 25% year-over-year growth. Gross margin remained at a very strong 85%. Revenue growth was primarily driven by automotive and very strong QNX development seat revenue, which is relatively lumpy from quarter to quarter and reflects the strength of the recent new design wins. Within automotive, the digital cockpit and ADAS remain the largest revenue drivers, and royalties and professional services were broadly in line with the strong quarter we recorded in Q3. In January, we had a very successful CES event in Las Vegas. Our booth was incredibly busy, and we held many productive meetings with current and potential customers. In addition, we made a number of very important product announcements. The first was the launch of our next generation QNX operating system, SDP 8.0. This offers a very significant step change in performance on high-powered silicon, scaling almost linearly, even up to 64 cores. This allows BlackBerry to offer performance similar to, and in some cases better than, Linux, without the fundamental open source safety limitations and future-proof software designs as new, more powerful chips become available. We see this as a significant step in expanding our competitive moat in our core safety critical use case, while also expanding our addressable market into non-safety critical as well. The industry response since CES has been very encouraging, including engaging this past quarter with one of the world's leading automotive chip suppliers to purchase our SDP 8.0 development tools. Another key announcement was that our hypervisor has joined our RTOS in being available in the cloud. This allowed Stellantis to develop the world's first digital twin of their digital cockpit, allowing their software development teams to collaborate from anywhere around the world, greatly reducing the need for physical hardware and significantly increasing productivity. In addition, we made some announcements regarding our various middleware offerings. The Mobility and Harmony Consortium selected Ivy for its Project X electrical vehicle platform. Further, we launched QNX Sound, a complete audio and acoustics platform that enables software-defined audio experiences without the need for heavy and expensive hardware in the car. And we've already recorded our first design win with a major European automaker. So moving to the outlook for the IoT business, due to the timing for potential upcoming design wins, we expect Q1 to be relatively quiet for potential new development seat sales compared to this past quarter. In addition, as we've spoken about throughout the past fiscal year, the auto industry continues to face material delays in software-defined vehicle programs. While this clearly presents challenges for the near term, it actually represents potential upside to the long-term view for the business. In order to address delays in developing next-generation software-defined platforms for their vehicles, automakers are increasingly discussing the potential for greater support from BlackBerry to help them solve undifferentiated software development tasks. In fact, rather than OEMs attempting to address this themselves, having a trusted expert like BlackBerry handle the complex integration of middleware on top of the RTOS, frees up their development teams to focus on the differentiating experiences further up the stack. Allowing BlackBerry to create what is sometimes referred to as a vehicle OS has the potential to greatly simplify and accelerate software development while allowing automakers to retain full control over their platform. Further, we're expanding our professional services team to provide greater support to our customers in integrating our software into their development projects. So with all these dynamics in mind, we expect revenue for Q1 to be in the range of 48 to 52 million, which is approximately 11% year-over-year growth at the midpoint. For the fiscal year, we expect revenue to be in the range of 220 to 235 million. Now, let me turn to the cybersecurity division. Revenue for the quarter beat expectations and came in at 92 million, representing 5% year-over-year growth. The strength this quarter came from our Spark product group, that is Cylance and UEM. Now, we consider annual recurring revenue, or ARR, to be one of the key indicators for our cyber business. As outlined during our last earnings call, this quarter we delivered stabilization of ARR on a sequential basis. In fact, ARR even increased slightly by 3% to 280 million. DBNRR also increased by 3 percentage points sequentially to 85%. These small but very important steps in the right direction for these key metrics illustrate the impact that a number of the improvements we've made are having within the business. In fact, the CEM and UEM renewal rates have been improving, and the past 2 quarters have been the best renewal rates in the past 4 years. In particular, this was a strong quarter for our Cylance Guard managed service offering, as well as net new logos. We see Cylance Guard as being a driver for growth this coming year, and we're doubling down on this and other areas where we have demonstrated we are winning. During the quarter, we successfully deployed a number of products and services that were part of the significant deal with the Malaysian government that we announced in November. In addition, you may have seen that last week we were proud to officially open our Cybersecurity Center of Excellence in Kuala Lumpur. This center will provide a wide range of globally recognized training courses that will help Malaysia grow a skilled cybersecurity workforce. So some examples of the wins for the cyber division this quarter included renewals and upsells with leading government agencies such as the U.S. Air Force, Department of Homeland Security, as well as wins across the globe such as the Netherlands Police, UK's National Crime Agency, Greater Manchester Police, and British Transport Police. In financial services, in addition to major US and Canadian banks, we secured business with Schweizerich and Julius Baer in Switzerland and the Bank of India. So moving now to the outlook for the cybersecurity business. From a longer-term standpoint, the addressable market for security software is so large and our customers' needs so diverse that no single vendor is in a position to dominate this market. Despite any near-term dynamics, we see significant opportunities for growth for our cybersecurity business in the years ahead. That said, in the near term, given the ongoing budget constraints of some of the leading government customers, which is a large portion of our customer base, we take a prudent view on both the timing and ability to close large deals that can drive near-term revenue, as was the case in Q1 of last year. For our enterprise and mid-market customer base, security remains a mission-critical priority, and we see a broadly unchanged, although somewhat challenging, macroeconomic environment compared to recent quarters. This consistent backdrop gives us confidence that we can continue to stabilize our core recurring revenue base, and we expect ARR to be flat sequentially into Q1. Therefore, we expect a more predictable revenue stream as we head through this new fiscal year. So allowing for a smaller impact from large, lumpy government deals and the ongoing macroeconomic environment, we expect revenue for the first quarter to be in the range of 78 to 82 million, and for the full year to be in the range of 350 to 365 million. So touching briefly on licensing, revenue for the quarter came in stronger than expected at 15 million. Looking to the coming fiscal year, we expect revenue to be approximately 4 million in each of the 4 quarters. So now let me turn the call over to Steve, who will provide you a little more color on our financials. Steve?
Thank you, John. As always, my comments on our financial performance will be in non-GAAP terms unless otherwise noted. Total company revenue for the quarter was 173 million. IoT revenue was 66 million. Cybersecurity revenue was 92 million, and licensing revenue was 15 million. The percentage of software product revenue that was recurring increased to approximately 90%. Total company gross margin improved to 75%, while operating expenses decreased to 113 million. Non-GAAP operating expenses exclude a 35 million goodwill impairment charge, 20 million of restructuring expenses, 8 million in amortization of acquired intangibles, 5 million in stock compensation expense, and 4 million in impairment of long-lived assets. Both non-GAAP operating profit and net profit for the fourth quarter were 16 million. BlackBerry delivered 3 cents of non-GAAP basic earnings per share for the quarter, beating expectations. Adjusted EBITDA, excluding the non-GAAP adjustments previously mentioned, was 21 million. Total cash, cash equivalents, and investments increased to 298 million as at February 29. Cash used by operating activities more than halved sequentially to 15 million. As a reminder, 2 quarters ago, this was 56 million, and Q3 was 31 million. Traditionally, Q1 is a seasonal low for cash flow, driven by the annual billings and payments profile. Therefore, we would expect a sequential increase in operating cash usage. However, a year-on-year improvement after factoring in the impact of the sale of our non-core patent portfolio in Q1 of last year. We expect EPS for Q1 to be in the range of -4 to -6 cents, and adjusted EBITDA to be in the range of -15 to -25 million. For the full fiscal year 2025, we expect EPS to be in the range of -2 to -6 cents, and adjusted EBITDA to be in the range of break-even to +10 million. We also expect to exit the year with both positive EPS and positive operating cash flow in Q4. This quarter, we recorded a 35 million non-cash accounting impairment of goodwill for the Spark reporting unit. This represents a non-cash charge of 6 cents to GAAP earnings per share. In accordance with accounting rules, we were required to perform a goodwill impairment review by determining a fair value for all reporting units, the total of which is required to reconcile to our market cap. Further details will be disclosed in our Form 10-K. As we announced during the past quarter, we successfully completed a $200 million 5-year convertible debt raise. The level of interest in the offering was high, and we were able to achieve competitive rates. As a result, we were able to fully repay the $150 million of short-term extension debentures that had been in place since the previous debentures matured last November. With this long-term financing in place, BlackBerry has a solid balance sheet, and we are well positioned to execute on our strategy. That concludes my comments, and I'll turn it back to John.
Thank you, Steve. Okay, so hey, as Steve mentioned, we are currently executing on our strategy to establish 2 profitable standalone divisions. During the quarter, we provided an update on actions we expected to take, and I can confirm that we delivered as planned. We have appointed divisional leaders such as finance, HR, and legal, and those leaders are currently building out their teams to address the specific needs of the businesses they support. In regards to cost, you may recall that during Q3 we executed on approximately $50 million of run rate savings, predominantly within the cybersecurity business and including approximately 200 headcount reductions. During this past quarter, we went further and took actions that will enable an additional $55 million worth of savings. Approximately $35 million of this came from cybersecurity, the cybersecurity business, and $20 million came from our central G&A functions. We understand how important it is for shareholders to see the benefits of these cost reductions starting to realize in the P&L. So in order to make it easier to track the cost improvements, starting this quarter, we are reporting sales and marketing separately from general and administrative. This new split aligns to how we're tracking towards our long-term targets as a percentage of revenue. Also, we think it is helpful to provide a cost run rate from before we started the reductions described as a baseline for comparison. Without getting into too many various one-time puts and takes in the reporting OPEX for Q1 and Q2 of this past year, we consider the average of the two to be a fair baseline to use. Non-GAAP OPEX for Q1 was $145 million and Q2 $114 million, giving an average of $130 million a quarter. This past quarter, non-GAAP OPEX was $113 million. That is $17 million lower than the $130 million baseline, or $68 million lower on an annualized basis. This shows that the actions we've taken are already having a significant effect, although you can expect it will take time for them to fully reflect in the run rate. We expect the average quarterly OPEX run rate for this coming fiscal year to be approximately $110 million. That is approximately $80 million lower than the baseline on an annualized basis. This reconciles to the $105 million of savings by allowing for timing, reductions in fixed cost of goods sold in addition to OPEX, and incremental targeted investments, particularly in our IoT business. In addition to the savings outlined, we are working towards further incremental run rate reductions. And as you can expect, these will take a little longer to action due to having more complex dependencies like systems or process efficiencies. Given the impact of the various cost reductions, we are modeling for positive operating cash flow and adjusted EBITDA for fiscal year 2025. So before we open the lines for Q&A, let me quickly summarize the key messages. This was a solid quarter for BlackBerry, in which we set a number of new records. The IoT business recorded its best ever quarter for revenue, its best ever year for adding new backlog from design wins, and its highest ever royalty backlog of approximately $815 million. Cyber ARR stabilized as we said it would, in fact showing some modest sequential growth, and revenue for the quarter grew 5% year over year. In addition to the positive news for the top line, we're also very focused on the bottom line. We executed on a number of significant cost-saving actions that build on those from the previous quarter and are helping drive positive EBITDA and cash flow this coming fiscal year. So that concludes my prepared remarks. So MJ, why don't I turn it over to you so we can open the lines for Q&A.
Thank you, sir. We will now begin the question and answer session. To ask a question, please press star 1 on your telephone keypad. Please make sure your line is unmuted. Again, that's star 1 to ask a question. We request that you limit yourself to one question and one follow-up. We'll pause for just a moment to allow everyone an opportunity to signal for questions. Our first question today will be from Mike Walkley with Canaccord Genuity. Please go ahead.
Great, thank you. Hey, John, just wanted to delve in a little bit to the improving ARR on the cybersecurity business. You know, with the endpoint market still over 40% legacy solutions, and it sounds like Cylance was part of the improvement this quarter. Can you just talk about how BlackBerry's position relative to some of the legacy players, and how you see maybe growth in this segment over the course of the year?
Yeah, absolutely, Mike. Hey, we're really pleased. You know, it's been a long journey to get our ARR to where we it's starting to stabilize and pivoting for growth. So a lot of heavy lifting in the product and in our customer engagement activities. So we're pleased that we're kind of starting to see that stabilize. As we think about future growth, we still think there's a tremendous amount out there. You know, when you think about the legacy endpoint providers like the Trellixes of the world, like the Trend Micros of the world, like the Broadcom Symantec install base, there's a lot of opportunity that's we think up for grabs for a next generation endpoint capability along the lines of what we offer in Cylance. So it was actually telling a lot of new logos, albeit smaller logos, but a lot of new logos over the course of the last quarter. And between that and our Guard platform, we're cautiously optimistic for opportunities to move that in the right direction in the next fiscal year.
Great, thanks. And just for my follow-up question on the IoT business, strong close to the year and a lot of records in that strong royalty, backlog. But you've laid out some delays, and the guidance kind of suggests maybe mid-single-digit growth this year. Based on your conversation with customers and some of these delays, are these multi-year delays? As you talk about the opportunity to grow that backlog, or do you see things kind of ramping through this year and picking up in calendar 25?
Yeah, we have not. The delays that we talked about last quarter, like a kind of a 4-quarter shift, 6-quarter shift, we have not seen that improve yet. So just the complexity of the software-defined vehicles, the skill sets of the OEMs, and it's not their core competency. Getting these things out is a little more of a complex and a little more challenge. I will tell you, we're doing everything we can to help them. As I mentioned, we're going to increase more in our engineering at the edge with our customers to help them do some of that integration with their development projects. But we're trying to be a little cautious because we're not seeing the floodgates wide open at this point. We're still seeing some sluggishness in getting those new software-defined vehicle programs launched.
Great.
That's why we're being we're being somewhat cautious and prudent about it based on what we're seeing.
Understood. Thanks for taking my 2 questions, and congrats on the cost execution.
Thanks, Mike.
Thank you. The next question is from William Kerwin with Morningstar. Please go ahead.
Hi, everyone. Thanks for letting me get a question in. Maybe just to keep it on the IoT business, obviously a lot of positive announcements at CES. Just curious, how those have been received so far over the course of the past 3 months, and are they already gaining some traction in the pipeline as you look going forward? And just maybe as a follow-up to that, the path to get back towards kind of a double-digit growth profile in this business. Understand it's still growing, but slower than you would probably like. Thank you.
Yeah. Thanks, William. So couple of things. The product, the pipeline is just exciting. SDP 8.0. It was a buzz at CES as we were walking through that. It's a step change in capability that really, I think, puts us in a strong position. And it's actually, to have one of the leading chip suppliers buy some development tools, a strong kind of statement to, the impact of that. The acoustics capability, the cloud capability, the fact that we got a couple of design wins there. We're supporting Stellantis in their efforts to leverage the cloud to be much more productive in their process. Pipeline's growing nicely. We're excited about the base level platform and with RTOS and ADAS, but now these other capabilities just puts us in that much more of a stronger position. So we're excited about the pipeline for the future. To your point, we wish some of this stuff would, some of that $815 million backlog would roll off a little bit faster than it's been, but we think when that stuff opens up, it's going to be a really good opportunity to drive some business model leverage into the business.
Awesome, that makes sense. And if I could just tack one more on, obviously some good progress on the cost savings already. Just curious if you could talk through, why you think the targets that you've laid out are the right size for the business. And how you see the progress going forward, I guess longer term past fiscal 25. Thanks.
Yeah, great question. To me, it's kind of a twofold impact from the cost side of things. One, I think that really helped us clarify where we're investing and how is just as we embarked on our strategy to split into two divisions. That really kind of forces us to look and say, where are we investing? Where can we, back off of that? In fact, we had some really renowned industry consultants provide us, some advice with some benchmarking on where we are and where the industry is. So, we kind of target the right levels and the right benchmarks for that. So I think that's one aspect of it. I think the other is, you can see a lot of it came out of cyber. So I think right sizing cyber, getting the efficiencies out of cyber that we think were there. I think I mentioned in the past, cyber grew throughout 5 or 6 different acquisitions over the years. So there was a lot of, R&D rationalization and that we thought was not going to impact the innovation cycle, but at the same time improve the overall business. So I think between working with consultants on the split of into two divisions, as well as some really focused efficiencies on the cyber side, we kind of feel like we're landing at the right place right now from a cost standpoint.
Awesome. Thanks so much, and congrats on the beat this quarter.
Thank you. The next question comes from Paul Treiber with RBC Capital Markets. Please go ahead.
Oh, thanks very much, and good afternoon. It's helpful that I think next quarter you're breaking out sales and marketing from G&A. You touched on the split of the company into IoT and cyber. What should we expect in terms of the disclosures around segmented profitability between IoT and cyber and in the timeframe for that?
Yeah, thanks, Paul. So, obviously there's a lot of activity internally at play, both from a business separation standpoint and from a from a cost streamlining and restructuring standpoint. So, the markers that we've kind of given on a total company basis, I appreciate, the desire to kind of have basically a full P&L for each of the business units. We're not in a position to provide that at this time. But on that, we would ask you to just stay tuned as we work towards that.
Paul, it's a good question. Kind of feel like you said, think of it as the breakout of sales and marketing and G&A. That's a down payment on giving you more transparency to our overall cost structure. And as Steve articulated, in the quarters ahead, I think we'll be in a better position to kind of take that to the next level. So hang in there with us, and we'll provide you updates as we go throughout the year.
Okay, and my second question just relates to the future opportunities for cost savings. I mean, also with that, what's the time frame that you're targeting to make those announcements, and does that also relate to the split of those segments, so we may get everything at once? And then can you also elaborate on like the nature of those reductions that you're considering?
Maybe I'll start there. I mean, there's a number of structural items, ranging from corporate, legal entity structures, which we've talked about before, just in terms of simplifying, IT systems, the supporting back office infrastructure, particularly from an IT standpoint. Those types of things are, bigger rocks, and that doesn't happen overnight. So we'll obviously actively looking at how to go about that and formulating the plans to execute on those. We'll be able to squeeze some of those types of items out, this year, but by and large, that's probably going to go. That will go beyond this fiscal.
And I'd add to that, Paul. Just November of last year to now, we did some heavy lifting on $105 million worth of real cost that's coming out. We're starting to see it, in the run rate, and that's heavy lifting on things that structural. We talked about facilities, I think, last time that we closed down. We're rationalizing our labs. We're fine tuning our go to market and cyber. We're doing a lot of those things underpinned $105 million heavy lift. The next peak, we're going to continue to focus, and we think there's still more opportunities to be more efficient. But those are, like I said, those, as Steve said, they're a little trickier. They're a little more intertwined. There's more dependencies. We got to be a little more careful and a little more thoughtful how we proceed on that, not to, disrupt, some of the momentum that we have in the business. So a lot of work that's done in the last 6 months. We still have a lot more to do, but we'll, be cautious about it, and we'll provide you, updates as we go throughout the year.
Thank you.
Thank you. As a reminder, to ask a question, you may press star, then 1. Seeing no further questions in the queue, I would like to turn the call back over to John Giamatteo, CEO of BlackBerry, for closing remarks.
Terrific. Thank you, MJ. Hey, thanks everybody for being part of the call today. We are, as we talked about, solid quarter for the company in many ways. Set new records with the IoT. It's really encouraging to see the cyber business stabilizing and the opportunities that we have in front. We're executing really well on the our strategy to split this company into two divisions and marching towards profitability on both of them. And we're pleased with the progress that we've made thus far, and we're going to look forward and committed to providing you all more transparent updates as we go throughout the fiscal year. So thanks for being on the call with us today, and we'll talk to you next quarter.
This concludes today's call. Thank you for your participation. You may now disconnect your lines.
Okay, so hi everyone. In essence, I'm going to re-listen to the conference call, look at the numbers again, and post a video after in terms of my overview. But in the meantime, the only thing is I had in terms of notes that I wanted to touch base on is on the $850 million in backlog. I liked one of the questions the analyst asked in terms of what is the time frame for that. So it kind of confirms that it's essentially, again, tied up on production. So John G. Mateo stated that it's like, I think he gave a very rough estimate though. So I think he said 4 to 6 to 8 quarters, which is roughly about 1 to 2 years. And he essentially said that it's tied to the production. And the way in terms of, for example, prototypes, all that stuff, et cetera, that does take years. It's not like, for example, they want it in vehicles next year. Depends on the feature, like the feature that's going onto the vehicle. If it's massive, it takes time. If it's a small feature, then they could add it for like, not necessarily next year, probably like 2 years kind of thing. Next, like 2 calendar years kind of stuff. But in this case, it is quite massive in terms of vehicle to vehicle software applications, all that stuff in terms of communication sensors, et cetera, in terms of BlackBerry Ivy. So it will take time, but the backlog is huge, 815 million in terms of royalties and all stuff and growing. So that's great. In terms of the IoT portion, in terms of revenue, the one thing I remembered was actually the 66 million is kind of quite significant because that is the highest earnings for the quarter that IoT has seen. I remember I checked it before. I'll confirm again in the next video I post, but I believe 66 million is the highest they've gotten. And the significance of that is the fact that quarter over quarter, I believe for the past 3 quarters or something like that, again, I'll confirm and I'll post it, has been growing. So it just shows the trajectory for the Ivy specifically, but IoT portion division of the company. It's growing, so that's good. That's completely positive, and it is cash flow positive and has been for the past few quarters. Going back, again, I'll confirm everything. But the cybersecurity side, they are projecting to be cash flow positive in fiscal year of 2025. I believe it was at the end, and once that's cash flow positive, the company in general will be cash flow positive. Again, they got this year that passed with the patent sale subtracted in terms of revenues about 635 million. They're projecting, I could pull it up right about here, projecting about 586 million to 616 million. I kind of feel like this doesn't include any of the patent sale portion that's coming in. Again, the first chunk was a massive chunk. The continuous chunks that are coming will be smaller, and it depends on when they come in and all stuff. But I believe this is a conservative estimate, which is good in my opinion, because that way it'll be easier to beat estimates, right? So that way, if they, for example, they got higher than 635 million, then they'll get into year-over-year growth territory, which is awesome. Plus, that will be beating analyst expectations because they tend to be around the same ballpark of what the company gives. Plus, outside factors, right? They'll assess the market and see how it is, and so on and so forth. But yeah, again, I apologize in terms of information before and after. Like right now, it's not really necessarily the best, just because operating on 1 hour sleep. But again, I'll re-listen to the conference call, look over the numbers for sure, and probably post the video within the next 3-4 days-ish, give or take. But overall, this earnings was great in my opinion. In terms of full fiscal year outlook, I think it's okay. I wish it was better personally. But at the same time, again, I think this is conservative. They're more looking for a good setup. But I like how the company is moving. Plus, the backlog is awesome. Let me just double check if there's any questions. If there's any questions, I'll answer them. If I miss them or anything, I'll answer them later on in the next video for sure. Okay, so he is the caller. Okay, cool. Yeah, I'm shocked he didn't show up today though. In terms of the call, Ivy update seems weird. Would be nice to get some guidance on Ivy. Yeah, I agree, Steve. I agree. The only thing is though, I think essentially there's not really much they could provide updates for the time being, besides just showing that the backlog, I think the backlog is growing specifically because of Ivy overall. Sell a company for $15-20 better. The only problem is to sell a company, like for example, John Chen stated before in the past, whatever valuation they'll get right now, it's essentially going to be on the low side. They, like for example, let's say if they wanted to sell the company for $30, just because they wanted to, they wouldn't be able to get that just because the multiples that they're getting in terms of whatever they're earning right now, and then times it by a multiple, certain like 6 to 7 times multiple, it just won't get that dollar value amount per share. That's the only problem. So whatever offer, if they were to accept right now, would be extremely low, and then they'll sell the company for example, like $10. I didn't do the calculations, but I'm just saying in terms of like $10 a share, which wouldn't necessarily be great for some people, and so on and so forth. Again, I just random arbitrary number of $10. It doesn't necessarily would be mean. It'd be $10, probably even lower potentially. But if they grow the company and increase the revenue, then you get the true evaluation. And right now it'd be technically too early. For example, once the backlog starts coming in and flowing in and all stuff, you'll see revenue climb. And I believe they stated, after we listened to the conference call, but they said that their quarters somewhat at one point, or if not soon moving forward, will be more sustainable instead of fluctuating up and down dramatically. So if that's the case, then you'll have consistent revenue, quarter over quarter revenue growth, which will be, or at least year over year growth, pretty easily predictable in a way, which would be awesome, as opposed to sporadic revenue coming in just left and right from random contracts, right? But yeah, once that revenue starts growing in, then the multiple added and all stuff, then you could sell the company for a good price. But at the same time, even a sale wouldn't go through too quickly, given how it's a cybersecurity company, and the government would have to get involved in all stuff. So it takes quite some time. That's a problem. Next year would be $1 billion in royalty backlog. Yeah, honestly, it is growing quite significantly. So I wouldn't be surprised if it hits $1 billion. And again, I like the way the company is moving. It's just, again, the only downfall, if you've been invested in BlackBerry for quite some time, it's not really the greatest thing to hear, but it will take some time. I think it will be rewarding for sure. It's just the time. That's the only aspect. Again, from this interview I clipped in one of my videos from the CFO from Ford, he stated he's more excited about the second phase of vehicles. The first phase was basic electrification, all stuff. But again, BlackBerry Ivy is not just only electric vehicles. So it's for any vehicles. It's specifically the software aspect in communications, which can be applied to any vehicle, not just electric vehicles, right? So he's more excited for the second phase, which is the software and services and communications, sensors and all that stuff, in terms of BlackBerry Ivy. It essentially sounded like BlackBerry Ivy, and he said the revenue from that will be, for the most part, massive. I can't remember exact words he used, but it seemed like it's going to be substantial. Plus, I saw numbers from another OEM, and they were projecting massive numbers. So hopefully that is the case. But yeah, again, sorry for, in terms of, usually this would be a lot more concise, but it's just, again, lack of sleep, unfortunately. But I'll re-listen to the conference call, all that stuff, and repost. But thanks again for the awesome support, guys. Appreciate it, and I'll see you guys in the next video. Take care. Peace.